The Lok Sabha has passed the Banking Laws Amendment Bill 2024. This landmark legislation introduces several key reforms aimed at modernizing India's banking sector and enhancing customer convenience. So what does it mean for you and the economy? Let's break it down. First, let's talk about nominations. Until now, you could nominate only one person for your bank account or safety lockers. But under the new law, you can nominate up to 4 people. Here's why this matters. If the original nominee isn't available, a successive nominee can step in, ensuring continuity and avoiding disputes. This is a big win for families and legal heirs, reducing the hassles often faced in inheritance claims. Next, what happens to the unclaimed deposits or dividends? Did you know that unclaimed amounts in banks have reached a whopping 78,000 crore rupees? Well, under the new bill, these funds will now go to the Investor Education and Protection Fund, or the IEPF. The good news, if you have a claim, you can now get your money back faster and with less paperwork. This reform aligns public and private banks under one framework, making things fairer and more transparent. Now let's talk about governance. The bill updates the definition of substantial interest in directorships for banks. This limit, stuck at rupees 5 lakh since 1968, is finally being raised to 2 crore rupees. Why? To reflect today's economic realities and ensuring that directors have a meaningful stake in a bank's operations. The bill also strengthens the financial oversight. Public sector banks will now have more flexibility to set competitive salaries for the auditors, attract top talent, and improve audit quality. For cooperative banks, directors can now serve up to 10 years, up from the current 8 years. This aligns with the constitutional amendments and allows for smoother governance in the cooperative banking sector by ensuring stability and continuity in their operations. And here's the bigger picture. India's banking sector is thriving. Public sector banks recorded their highest ever net profits last year at rupees 1.41 lakh crore. That's a testament to the reforms and stability measures implemented since 2014. The government's focus on professional management and reduced dependence on recapitalization, which refers to the process of restructuring a company's debt and equity mixture to stabilize a company's capital structure, has indeed paid off for the banking sector. Banks will now have more flexible reporting timeline, which also is likely to improve efficiency. So what does this mean for you? It means smoother claims, more flexibility in nominations, investor protection, stronger governance, and accountability. The Banking Laws Amendment Bill 2024 is indeed a step toward a more customer-friendly, accessible, transparent, and robust banking system. This bill now moves to the Rajya Sabha, but it's already a clear sign of the government's commitment to reform and strengthening India's banking system. As Finance Minister Nirmala Sitharaman said, the intention is to keep our banks safe, stable, and healthy.